with couldn't be more different points of view about everything from the economy to the stock market.
Lee Munson is founder and chief investment officer at Portfolio LLC, and Peter Schiff is CEO and chief global strategist at Euro Pacific Capital. Gentlemen, thanks so much for joining us. Lee, let me start with you. You think the economic indicators are showing that we're moving in the right direction?
Well, I do, and I think that you have to look at what's been happening since the bottom of the market back in March in 2009. We were at a deficit spending of almost 11% back then, and last year we were close to 8%. So we are spending less, and that's important for the stock market because people are concerned that if the U.S. government spends less money, that's going to derail the economy. They already have been spending less money, and the market continues going higher. Corporate profits continue to move up.
All right. Now, Peter, I know he said about 10 things there that you're going to disagree with, but let me just pick on one, which is the growth of the economy. Jamie Dimon, who is pretty much of a realist, Jamie Dimon sees the economy getting better. He's against regulation, against bigger government like you and I are, but he does see the economy getting better, growing at 3%. Is Jamie Dimon an idiot? I mean, he's a pretty smart guy, no?
He may not be an idiot, but he's wrong about the economy. I wonder what Jamie Dimon was saying about the economy in 2007. I'm sure he thought it was growing quite nicely back then. He was wrong then, and he's wrong now. You know, the economy is not recovering. It's getting sicker. The Federal Reserve and Congress are preventing a real recovery. A real recovery would mean we spent a lot less. Consumers would be spending less. Government would be spending less. Interest rates would be a lot higher. We would be saving our money. We would be investing. We'd be paying off debt. We'd be producing. You'd see the trade deficit coming down, the current account deficit coming down. None of this is happening. All we're doing is delaying the pain with QE. And you mentioned earlier whether or not QE3 was coming. Unfortunately, it is coming. And if it doesn't come, we're going to have a collapse much worse than 2008. But unfortunately, that's part of the cure. We have serious structural imbalances that need to be corrected. And in order to correct them, the banks are going to have a hard time. The government's going to be forced to dramatically cut spending, maybe even restructure the debt.
Lee, what about that? What's wrong with the apocalypse now theory?
Well, I'm really not into, radical endgame theories. I love what Peter has to say because it is a warning for us to change our ways. But the bottom line is that we have been changing our ways, and just look at, just take a look at gold and take a look at the S&P 500 from those March lows back in 2009. Look at a chart. Basically they've gone up together. They've had basically the same performance, only the S&P really has, they make things, there's real things. Everybody's so concerned about jobs. Everybody's concerned about are they the right jobs? I would say we have to start someplace. And it's great to talk about what could happen into the future if we don't do these things. But the bottom line, we are cutting the amount of spending.
I don't see how you can argue we've mended our ways. I mean, if we add jobs that make us poorer, if we add more jobs that just consume and don't produce, and we're deeper in debt, it's actually counterproductive. And sure, if you overlay a chart between gold and the S&P,
let Peter talk for a sec. Go ahead, Peter. Finish your point.
If you overlay a gold chart with the S&P 500 for the last 10 years, you have huge returns in gold. You're making nothing in the S&P. Recently, the S&P has gone up, but I mean, this is just a long-term bear market in terms of the stock market in gold. We're in a bear market that's going to continue.
Lee, you say things are getting better, but do you deny that the American dream is starting your own business without the government getting involved and taxing you from here to eternity? Do you deny that it's harder to achieve the American dream now than it used to be?
No, I think that, I wouldn't. First of all, it's easier to start a business. Taxes are lower than they were 20, 30 years ago.
It's easier now. Have you seen the tax code is a lot bigger? The regulatory code is a lot bigger.
But what about where taxes are going to have to go?
There's never been a free market.
Go ahead, Lee.
Listen, the bottom line is go look at the statistics about the last 100 years when we've gone up in marginal tax rate. And, 6 out of the last 10 times, the market went up the year before and the year after taxes were raised. And so I think that we have to separate out what Peter's talking about, which is a long-term problem, with the type of
it's not a long-term problem anymore.
That are helping.
It's a short-term. It's a short-term problem.
Listen, what are we going to do
with interest rates? It's Peter's turn to respond. Peter, go ahead.
We've been right on the 10 years, but not over there.
What are we going to do if interest rates spike up? I mean, look at the yields on the tips now. They're going at a negative rate. Even though I think the CPI way understates inflation, inflation is a huge problem. The cost of living is going to go up. What are we going to do with a massive debt financed with T-bills if short-term interest rates spike up to 5 or 10%? What are we going to do?
Because they're not. Because there's a global shortage
What do you mean
of
they're not?
risk-free assets, and everybody wants to talk about
but the Treasury,
food and fuel. For quite frankly, we can change our ways. Hey, we can eat less and we can buy a Volt. GM needs the business. But when you look at the end of the day, I understand there's inflation, but there's too many people who want those risk-free assets because you're right, Peter. There's slow growth, and so that risk premium to stocks aren't there. The Fed is not the reason why rates are low.
Okay,
it's
hold on
because
a second, gang. We started with Lee. We only have time for one more response. Peter, you go ahead.
Treasuries are not risk-free. That's the problem. And when people realize just how risky treasuries are, nobody is going to want to hold them. That is the problem.
Lee Munson, Peter Schiff. By the way, Lee, nobody is buying a Volt right now. Not many people anyway. That's part of the problem.
I know.
Guys, good to see you. Thank you very much. Terrific.